And if you think about the mess of FTX, we need exchanges on blockchain. We need the recorded ownership of assets. When Lehman Brothers went under, everybody's got a claim on the collateral, and there's 35 claims on the same piece of collateral, right? This sorts it all out, automatic settlement of everything. We've seen that in DeFi. DeFi is a great experiment in showing that everything can automatically settle. I don't think people understand this Solana fire dancer, and again, not just picking on Solana because I'm long of it, but it's just like, they're thinking that Solana's theoretical TPS is 65,000. Fire dancer takes it to 1 million.
Greetings, lovers of cryptocurrency. We're excited to discuss the secrets and possibilities of the cryptocurrency business in 2024 with Raoul Pal, the visionary CEO of Real Vision. Raoul Pal gives us a new outlook on the impending bull market, which is expected to erupt in the first quarter of this year in this exclusive interview with Anthony Pompliano. Raoul, who is renowned for his strategic insights, explains why he decided to dramatically raise his stake during the previous bad market, and why he continues to have an optimistic view on digital assets. Join us for a thorough portfolio update as Pal walks us through the cryptocurrency assets that he thinks will see the most growth in the upcoming months. Get unique insights into his opinions on how the world of cryptocurrency investing is changing. But what sets this cycle apart? Raoul Pal says that this year is unique. Prepare for a financial infusion when significant pension funds and institutional investors join the party. According to Raoul Pal, the cryptocurrency sector is expected to reach a remarkable $10 trillion valuation, and he explains why Bitcoin and Ethereum will likely regain their dominance. Raoul clarifies the characteristics of this cycle that set it apart in an uncertain market, arguing that depreciated fiat currencies will be a major factor in promoting the adoption of cryptocurrencies and drawing in more money than in the past. So, cryptocurrency enthusiasts, buckle up. Come join us for this stimulating conversation as Raoul Pal leads us through the many flips and turns of the cryptocurrency industry while offering unmatched insights into what's to come in the exciting realm of digital assets.
I'm very overweight Solana because I could see it survive the worst nuclear winter, and the developers were very active, the community was very active, and then they made some big tech breakthroughs with being able to mint 1 million NFTs for $100. And then Fire Dancer, which kind of changes the entire game again in terms of speed and cost. So I think that that's why I backed that horse, and still having Bitcoin and still having Ethereum. And then there's a bunch of new stuff, out of Sui and Sei and Polygon, and there's so many things. And the answer is I don't know. It's difficult. That's one of the reasons I set up the asset management business. I've got Exponential Age Asset Management, was because this bit is difficult. It's easy to own the top 3 or 4 and not get up. It's very difficult to choose the winners unless you're in it all day, understanding everything. And so the idea I had was to start an asset management business that just invests in crypto hedge funds. So it's a fund of funds. So they actually are doing the work to find that, because otherwise it's actually really difficult to do. Again, we've all got proof in our wallets that we thought we were onto the next big thing, and it wasn't. But in terms of, is it a winner takes all? I just think we can't tell. I doubt it. I think different chains will be used for different things, but it'll probably end up being a total of 5, take 80% of the market. I mean, XRP is another one. It has use. There's plenty of use, but it's not the best performing asset. It's a blockchain that gets used. There's a bunch of others with big market caps that aren't used at all, just for fun. I mean, you can use Doge. Elon may use Doge for payment systems or whatever, some way, shape or form. But Doge's got huge market cap, just driven by retail investors. It's bananas, but this is the space we're in. Listen, I think the whole space, the meme is really important. I mean, the best meme Bitcoin ever had was not digital gold, it's number go up, right? I mean, that's such a powerful meme, right? And people get it. And so memes are really important because these are new things and people don't know how to really place them in the mental framework. But then it's kind of a child of the internet too. So, dog with hat is like the big meme coin of the moment. And that's fine. It's kind of pure speculation and culture. It's the value of culture. But the problem is it can die so quick, the culture of one thing, and others are pervasive like Doge. So it is really hard to do, but my God, you can make a lot of money. And in my 10% DGen portfolio, I've got a couple of those that are just memes that I think could work, but it actually takes a lot of work. So a few of my friends are really good at doing this. They really focus on the meme. I try and look at the meme that might run for a year or a year and a half, as opposed to the meme, because some of these will do 50x in a month and then disappear. So it's hard, and I don't like people to do it unless they really know what they're doing, or if do it with the 10%, because that's one way of, you just think you're on to the next 100x, you put all your cash in, you get rug pulled or whatever, and before you know it, you've lost all your money.
Raoul Pal clarifies a crucial financial balancing act that banks must perform in order to achieve interest rate neutrality without severely disrupting the world economy. A significant impact on economic activity is anticipated, and investors are speculating about a possible tightening of financial and credit conditions for individuals and companies. Raoul Pal focuses on important economic data, revealing predictions about inflation, stock market fluctuations, and the possible impact of cryptocurrencies on the world monetary system. Come along as Raoul Pal breaks down these important factors and shares his perceptive opinions on how the economy is changing. Let's now explore the complex web of financial dynamics and see what he has to say next.
Starting to get phone calls, which is interesting, right? Once you start to get the phone calls, because there's a bunch of them that deep in the space, like Alan, he's deep in the space. A bunch of them have people who are already operating, this bucket for them. So, they're always around. The Paul Joneses and the Stan Druckenmillers, they'll be periodically in and out. They're agnostic. They get it, but they're traders. You've got the Lewis Bacons of this world who have teams of people doing stuff, as do a bunch of them. But then there's the other kind of billionaire crowd, which is the other hedge fund managers or just the general billionaire crowd. And a lot of them came into it for the first time last cycle, had their metal tested, were like, God, this is not easy, but I know they'll be back. So I'm getting quite a few phone calls from that crowd as well, which is like, hey, should we get back in, and what should I be thinking, and how should I be doing it? What does this all mean? So I think that they'll all be back in. And I think this time around, they'll stay, because now they understand it. You've got to go through a cycle to understand how this asset works. So I think they'll stay this time around, and they'll figure out how to deal with it. I've done a lot of work from Global Macro Investor, which a lot of these guys are all subscribers to, and I've basically proven that crypto is a macro asset. It's driven by the same forces of liquidity, and you relentlessly show that there's a narrative which is like, this is funny internet money, blah blah blah, and you show them it's exactly the same forces. So you can use global M2 or liquidity, whatever thing, and then you start proving, okay, how do you use the same macro tools and chosen different assets? What are the outcome? And you find that even on a risk adjusted basis, crypto is like 5 or 10 or 20x better. It's like that. I think you tweeted it out as well. Fidelity put that hilarious scatter plot of risk rewards of all the assets, and all bottom left. And then you kind of don't realize, but you have another look, and right up at the top right is Bitcoin. It's right. It's ridiculous. I think the main driver of this whole space in terms of private capital has been family offices, because they don't have a mandate. They can do what they want. So we've seen and continue to see the family offices drive the VC business and the hedge fund industry. The institutions are still few and far between. The guys at Texas Teachers, there's only a few that have really allocated. Nobody's done a big allocation. There's a lot of noise that the Middle East is doing stuff, but I don't see many people actually coming back with tickets. So I think that's still to come. It feels that, because if you think about how the world works, even when we look at from XPAM, the hedge fund side, none of the hedge funds are on like the Cambridge Associates platforms and the big platforms. They just haven't done crypto. So the traditional way of some giant pension fund going to Cambridge Associates, finding what the right hedge funds are, and having Cambridge do the due diligence and then allocating doesn't exist right now. So they don't really have a way of doing it, unless you've got some sort of pioneers within the shop itself. So it still feels like the major institutions of that type. We'll see more this time around. We saw a reasonable amount last time. We'll see more this time around. It's probably the cycle after that. I think the ETF is a good thing, because I know there's a lot of rogue fund managers who know that they can hoodwink the risk manager by saying, I've just got an equity. It's called IBIT. It's an equity. You don't know what it is. And it's Bitcoin, right? They will do that. There'll be a bunch of people who do that. and eventually they'll get the mandates to do it properly.
Raoul Pal, a respected figure in finance, reveals a growing interest in cryptocurrencies among billionaires and hedge fund managers. He notes an increase in inquiries from those deeply involved in the space and a second group returning after facing challenges in the previous crypto cycle. Pal anticipates a more sustained engagement this time, as these investors have gained a better understanding of crypto dynamics through a full market cycle. Raoul Pal highlights the macroeconomic aspect of cryptocurrencies, contending that the same forces of liquidity drive them as conventional assets do. He makes the observation that cryptocurrencies perform far better than traditional investments when risk is taken into account. Family offices have had a significant impact on the cryptocurrency industry and have influenced venture capital and hedge fund operations with their flexible investment objectives. Pal says that although institutional engagement is increasing, large institutions should exercise caution since universal acceptance will take some time. Exchange-traded funds, ETFs, offer a familiar investing channel, which is why Raoul Pal believes they might be game changers for increasing institutional engagement. Raoul Pal's observations essentially point to a changing environment with increasing institutional interest in cryptocurrencies, suggesting a longer-term and more extensive adoption in the financial markets. Please remember to press the like button and subscribe to our channel if you found this analysis on financial markets, cryptocurrencies, and upcoming trends to be interesting. Your encouragement motivates us to continue producing excellent content. We appreciate your interest and invite you to return soon for additional updates on the fascinating field of finance.